Hello, and thank you for joining us for today's Ask Andrew show, Canada's first Facebook family law question and answer show. My name is Andrew Feldstein, and I'm the principal of Feldstein Family Law Group. We're a firm of family law lawyers in the Greater Toronto Area. Both myself and our entire team practice exclusively in the area of family law, and we have offices in Markham, Vaughan, Oakville, and Mississauga. Today, our guest is Edward Nagel. He's the principal and founder of Nagel Associates, a Toronto-based boutique forensic and investigative accounting firm. Welcome to the show.
Thanks very much, Andrew. Appreciate you having me on the show today.
So I love the fact that your description is the principal and founder of a forensic and investigative accounting firm, because as a family law lawyer, I hear all the time from clients who come in, my former spouse is hiding money, they've moved money offshore, they're not disclosing the money, they've transferred it to their friends and family or whomever. And we hear this all the time, but the problem is it's one thing to hear a theory and it's another thing to be able to prove it. And that's really where you come into play.
That's right. That's right.
And unfortunately, financial misrepresentation should never happen in family disputes, but it does. And can you tell us about the common types of misrepresentations, manipulations, or red flags that you see when you're hired to assist in a family law matter?
Absolutely, Andrew. The two most common areas that we tend to see manipulation in family law cases is one being the manipulation impacting equalization calculations, and the second being the manipulation of the calculation of income for child and spousal support. So at the date of marriage, what we tend to see is the overstating of assets and the understating of liabilities. And then the converse holds true at the date of separation, where we tend to see the understatement of assets and the overstatement of liabilities. When it comes to income, generally speaking, what we tend to see is actually the understatement or underreporting of income for child support. You asked about red flags or potential indicators of these types of manipulations. The first one I want to comment on is a lifestyle that seems to exceed the person's reported income. And we had a case several years ago where an individual had reported their income to be $100,000, but it was very clear based on their lifestyle that that income wasn't sufficient to support that lifestyle. And in fact, what it turned out is we actually determined they were earning about $750,000 over the last 3 years on average, based on the analysis that we had done. The other area we should look at is deposits coming into bank accounts that exceed reported income. So when you have, say, $1 million of deposits going to an account and only $500,000 being reported of income, it's quite possible that that delta of $500,000 or so represents sources that are not income. But in my experience, invariably, there's an element of income that's not included within that delta. The other red flag is the lack of complete documentation being provided in response to requests for financial disclosure, or what appears to be altered documents. So look for pixelated logos, look for spelling and arithmetic errors on receipts that are computer generated. They shouldn't happen. And so those are the kinds of indications that perhaps something is offside. We also spend a lot of time, Andrew, looking at banking records, looking at inflows from unknown sources, outflows to unknown destinations or beneficiaries. These could be indications that money is being funneled through bank accounts, which is actually not being reported from a revenue perspective. One of the other things, Andrew, we're seeing over the last few years, a trend that has emerged, particularly in family law, is the uptick in the use of cryptocurrency. And spouses are acquiring cryptocurrency, and particularly if they did several years ago when the value was much less than it was today. And so that represents both a potential asset as well as income that they could be deriving from that cryptocurrency. The final area in terms of a red flag that I would suggest is looking for any potential indication that your ex-spouse has traveled to certain jurisdictions that are known tax havens, like the British Virgin Islands, Cayman Islands, Switzerland, or Luxembourg. If you see mail coming in or account statements from institutions in those particular jurisdictions, that would certainly be a red flag that I'd want to pursue.
So I'm going to start with something you said right at the end, because I found there's a lot to unload in what you just said. And I've seen clients who want to come in and they want to open up the mail when it comes to their home. And they may not be allowed to open the mail, probably aren't if it's addressed to their spouse. But what it doesn't mean you don't do is when you get that letter and you see it's from a bank in the Cayman Islands or I think a Panama is one that I've seen before. Nothing stops you from taking out your phone and snapping some pictures. So you see your former spouse's name, you see it addressed to, a bank in the Cayman, from the bank in the Cayman Islands. What it is going to do is it's going to lead to a lot of questions right away, because I don't know about you, but I don't bank in the Cayman Islands. So banks from the Cayman Islands aren't communicating with me. Just sort of an obvious red flag. So if you are going to get that, the best thing to do is you can give that envelope to your lawyer. Your lawyer can have it. Your lawyer can even send it to the other lawyer saying, we got this from the Cayman Island. Our client didn't open it. We expect you to preserve that document, not return it to your client, and we would like to see a copy of it. That way you're doing it the right way. You're not fueling the fire. And I know some clients would say, well, why do you trust the other lawyer? There's a simple reason. I don't know a lawyer that's going to want to prostitute themselves for their client by handing them that envelope. It's illogical. A mistake may happen and they may return it, but it would be illogical. So that, to me, of the comment you gave, that's a really easy one when you see that letter come in terms of what to do with it. And if you're not separated, you see it coming in and your marriage isn't in the greatest of places and you're getting a funny feeling, take pictures of the stuff. If your spouse opens it up in front of you and it's sitting on the kitchen counter, go take a picture of it. There's no expectation of privacy when someone leaves it on the kitchen counter. Now, the reality is more and more things are electronic, and if people are smart, they're doing it electronically. But that's a different issue. Now, I went through and I took some notes down about what you're saying about people hide things from equalization and they hide things from income for support. I start with the presumption that usually when people get date of marriage assets, it's usually proving their date of marriage assets. It's a higher probability of the accuracy of it because they're produced, if they have that statement from 20 years ago, unless the statement was a fraudulent document that they just created, it's more likely to be accurate, more likely. I don't know if you agree with me on that.
Well, I think that's probably a fair assumption. That said, though, I've had cases, Andrew, where clients have come to us and said, my spouse has destroyed, or in some cases, removed records from the home from the date of marriage. And we actually had to reverse engineer taking current records and go backwards 10 years, because the banks generally only keep records for about 7. And so we had to actually create a historical tracking of that activity so that we could create that opening balance at date of marriage. And that is something that does occur on occasion.
And I guess that's a reverse in a way of what you usually look for, because you're usually trying to find the hidden money. And I've said this in many consults with clients, and I say to them, do you have the proof of your date of marriage assets? Say, oh yeah, where is it? In the filing cabinet at home. I tell them, you better go grab it, take a screenshot of it right away, put it in the cloud, save it in a few places. And they phone me up an hour later and say, Andrew, it's gone.
Yeah,
I see that one, because when it's 20 years old, most people weren't as anal as I did. And when they got married, went and took their date of marriage bank statements and put it in a safety deposit box that solely belonged to me. That's right. That's really the ideal standard. And in today's era, when things can be saved in the cloud and backed up, if I'm getting married, I keep all my statements electronically where my spouse, even if I trust them, will never have access to. I would print them off and put them in a safety deposit box like I did, because that way you can prove it.
Right.
And then it's pretty easy. The ones where we see, I think, a lot more problems with is the current date value of assets without getting into income. And that's where people may say their business is worth less, or money has disappeared, money is missing. And I note that one of the things you said was looking at the lifestyle. And some of our viewers are in the middle of going through their case, and other viewers haven't started. But one of the things you have to do is you have to fill out a financial statement. And that financial statement is a form, typically 13.1 if property is an issue. And on a 13.1, you're going to list your income and you're going to list your expenses. And I assume that's probably one of the places you should start looking at is what did the person swear their expenses were? Am I right?
That is correct. We certainly would look at the sworn statement as a starting point. We would actually ask our clients to pull together all available financial disclosure by way of bank statements, investment account statements, and other financial records that would enable us to commence that verification exercise of what's been represented.
And the one I've always found the most shocking is the individual who is in I'll call it a known cash kind of business. This goes more to income, but they'll say that they're making $20,000, $30,000 a year. But then when you look at their budget, it says $160,000 a year on their sworn statement. And then you go look at the debts and you don't see any debts and you say something doesn't add up. And that's an easy one. That's low hanging fruit in my mind versus the one where somebody discloses they're making $250,000, says they're spending $250,000 on lifestyle. So you don't have that easy low hanging fruit. And now we have to come to you and say, we think there's a lot more money that they're not disclosing because this is a smarter person than the one who's doing the 20,000. And I'm assuming that's where you start doing some of the analysis that you're talking about here.
That's right. We do like a bottom-up analysis where we try to build that individual's lifestyle, Andrew, to figure out exactly what it is they're spending and then gross that up and say, in order to spend this much, you actually have to be earning this much plus the purported tax rates. One of the ways in terms of hiding cash, one of the strategies I've seen a lot of people adopt is to pay off credit cards, lines of credit, as well as other debt using cash. And so one of the things we often do is reconcile payments going into these types of debt accounts with the banking records. And if there's no evidence of those payments being made out of the known disclosed bank accounts, that's a pretty good indication that there's probably some cash income involved.
And one of the things I also will look for is certain ordinary payments that everybody needs to live. Everybody has to buy groceries. Everybody who drives a car, maybe. So if you live in downtown Toronto and you don't own a car, that's one thing. But if you live in the suburbs like I do, everybody drives a car. It means you're going to pay for gas. And when you see a case where there's no gas payments, no grocery payments, maybe no clothing payments, no restaurant payments even, you get a picture of, well, how was that possible? How did you not eat?
Agreed. And in fact, what we do is when we first interact with our clients, we have a meeting and we have them sit down with us and tell us all about their lifestyle, because ultimately, Andrew, they are invariably in the best position to provide us with information about their life together with their spouse during happier times. They observed while they were on vacation that there wasn't a single payment made to a hotel. How did that hotel get paid? Their children in university, they're not paying tuition payments. Who's in fact paying those tuition payments? So those are the kinds of things that our client can shed light to us as their professional advisors to assist them in determining maybe there's a gap here in terms of what they're representing versus what they're actually earning.
And it also gets down to also the expenses, because sometimes if they're self-employed, there's a whole whack of personal expenses that are running through the business. And I guess when you're talking to the client, that, again, I'll say low-hanging fruit. It's when the client says, well, every Saturday night when we were married, we would go out to a fancy steakhouse for dinner and we'd spend $400 on dinner all the time. But yet then you go look at their credit card summaries or the GL of the corporation, and you see those $400 at High Steakhouse every Saturday night. You're getting a pretty good picture. Well, that may not have been a business expense.
Absolutely. And another strategy that we see frequently occurring is that ex-spouses are putting their new partner onto the company's payroll, either by way of a T4 as an actual employee or adding them as a vendor of the business and paying them through that. And of course, the money funnels back to your ex-spouse somehow indirectly. But that certainly is one of the things that we see as a way of lowering your income, and also potentially even lowering the value of a person who has an interest in a privately held business, because they're now creating an expense that artificially lowers the profit of that business and inherently the value of that business.
And again, it's a question of how smart they are about doing it. So when it's a numbered company that appears out of nowhere that is getting a large expense, it's going to beg the question. But if somebody did it smart, they would do it, maybe 10 or 15,000, give a good name to the company so it sounds like they're a supplier of something real, and just slightly grow it over a few years. I would think there may be a better chance of it being missed. But too often, I think people are greedy, and out of nowhere, there's going to be a payment to 123.4 Inc. for $80,000 that happens, and you're going to say, well, who's this new expense that just came on the books for 80,000? So
exactly. Yeah, that's one of the reasons why, Andrew, we typically start off with the banking records, because cash is king. You follow the money, find the fraud, as they say. And so doing a source and use of funds, looking at the inflows and outflows out of a business, particularly one that's self-employed or somebody has a corporation and they're the controlling shareholder, to look for those unknown inflows or sources of benefits that are coming in from unknown sources. And similarly, the outflows, they're going to beneficiaries, as you mentioned, Andrew, a number of companies or vendors that don't appear to be related to that individual's business. Those are the threads that we want to pull on when we're doing these types of analyses.
And it's fascinating because people will go to great lengths, and sometimes people are going to get away with it, regrettably. And other times it's what they're trying to do is just really obvious. And you find it, there's one time I remember there were about 40 missing cars from a used car lot. We had the inventory done. 40 cars just poof, disappeared. Where did they go? Another time it can be inventory in a retail store. Poof, where did it go? It was probably the cash sales. And these are all the things that people say and find, but there's always going to be a creative argument on the other side. And then ultimately you're going in front of a judge or you're making a compromise because you don't necessarily know how the ultimate trier of fact is going to find it, because the other side's going to say that you're ridiculous, you're finding craziness, things don't, you might think they don't add up, but it's just poor accounting records. And some people have poor accounting records. Right. Far off the mark and the kinds of arguments you hear from the other side.
Yeah. Well, one of the things that we often do, Andrew, in these types of cases is we actually request authorization to meet with the external accountants of the payor spouse, because invariably these are, friends or acquaintances to do things to assist their client, their friend, in helping to keep, their taxes minimized or to reduce their income or both. And so meeting with their accountants, their auditors, to look at the working papers. What analysis did they do? Most people don't do audits unless they're required to do so if they're publicly traded companies. So most privately held businesses will simply have a compilation, which is just literally the accountant putting their letterhead on what's been provided by the client. So the information on there is just as good as the inputs provided by the client. So it isn't reliable and certainly subject to manipulation.
And I assume that one of the things you do is you look at the expenses to say, does this make sense for this business? I mean, I'm a lawyer, so I obviously have knowledge of a law firm. If I see a sole practitioner who's running a law firm and their percentage of profit over revenue is at 20% as a sole practitioner, I'm going to scratch my head and say something doesn't make sense, because you're going to initially think there's a lot of personal expenses going on here. And that may lead you to probing and asking more questions. It may take you down a pathway of finding out, well, that's true or not true, but it's certainly going to jump off the page at you. And that's, I'm assuming part of the analysis is you start looking at it and you look to see, do these numbers make sense or do these numbers not make sense?
Absolutely, Andrew. We do look at starting at the gross margin, the difference between revenue less the cost of goods sold. And then below that line, below the gross margin line, we look at each of the different overhead expenses as a percentage of revenue, as well as the nature of the expense itself, to determine, does this make sense given the nature of the business they're in? And as a percentage of revenue, is it reasonable that they're spending this amount of money, as you suggested? It doesn't make sense, or it does make sense. And then we then request supporting documentation in respect of any items that we don't agree with or question, to determine what was the nature of those expenses. Did they put through a renovation of their personal residence or their new home or new condo they're renting through the business? And that's why they've got huge amounts of operating expenses going through this year as compared to, say, prior years.
And that's part of an important exercise that takes place. Sometimes I find the clients, they find one of the challenging aspects is getting our legal fees and then getting accounting fees on top of it. It becomes a very expensive process. And I think of one person in a similar industry as you. He used to say to me, you can usually find 80% of the issues for about 20% of the money. And what you don't want to do is go crazy to do a forensic audit on every line item, because you can, but that's going to be really expensive.
Absolutely. And in fact, Andrew, one of the things that we do with clients and with the lawyers that we work with is we sit down and we triage each case to do cost benefit analysis. We spend time with the client understanding their lifestyle, understanding what the ex-spouse is doing and what they've been involved with, and the potential for there to be unreported income or personal expenses or both going through their businesses. And then we determine, does it make sense to pursue this? And then we plan out a strategy that really focuses on the areas that we think will yield the highest potential benefit. Otherwise, you're right, it can be a very expensive exercise.
And to those that are self-employed, they have to realize that optics say a lot. I'll never forget when I had a file and the payor in that case made maybe 50, 60, 70,000 a year, but he went and bought himself a luxury car like a Lamborghini for cash. You know, I went into court that day and said, Your Honor, he's driving a new Lamborghini. I said it about 5 times and the judge said, okay, Mr. Feldstein, I get the point. But the point is, there's the judge who is earning a very nice salary, who I know is not driving a Lamborghini. And in their minds, right away, when we start alleging all of these add-ons that we want to get their income up from their 50, which it clearly isn't, to whether it's $500, $600, $700,000, in the back of the judge's mind is that Lamborghini that they bought cash for. Whether it's really that glaring piece of evidence, but it's the optics of it. And then when you tell the rest of your narrative and the other side wants to say he's crazy, the judge is going to think Lamborghini.
Yeah, absolutely. That's a great example. Absolutely.
And these things for the viewers, you have to understand. I know we have some viewers who are self-employed and they may be about to go down this avenue, and they may have friends who are telling them, hide it, don't disclose it, she'll never catch it. It really isn't a good idea. The best thing is come clean, because if you do come clean and you do disclose what you need to disclose, you're going to make a deal. And then when you want to go to bed at night, you're not going to be looking over your shoulder wondering, is something coming after you in the future? And it will allow you to get a lot quicker to getting to a deal. Like one of the things you talked about is a document you get under disclosure. When you're not getting the disclosure, one of my favorite ones that I know the experts always ask for are things like the general ledger. You want to see and the general ledger, for viewers who don't understand it, every transaction from a company in a year goes into the general ledger. Somebody like you is not going to go look at every line item, but you're going to have an idea where certain things are that you want to look at, if I'm right. Like you're going to go look at who got paid the salary, and you're going to say to your client, were these all people who were truly employees, or is that his mother, his sister, his brother, her sister, whatever? That's low-hanging fruit that we're talking about. Is easy to find things if it's there. And when someone says, I'm not going to give you the general ledger, you scratch your head and you say, why? That's when you start thinking things are hidden. Do you agree with that?
I completely agree, Andrew. When any resistance to provision of financial disclosure, to me, is a huge red flag. I mean, general ledgers certainly are an important document, particularly somebody who is self-employed. I would say any type of financial statement, like or bank statement, investment account, anything that contains financial activity, because it is easier to manipulate a general ledger than it would be a bank statement. A bank statement is documented by the bank unless somebody alters that, for which, as I said earlier, if you see, pixelated logos and covered transactions and concealed transactions, it's much more difficult to conceal. So historical activity in a bank statement is really a good source of information. But again, it depends on whether or not the person is willing to provide that information and if it's complete and accurate.
And one of the nice things as well is the adjusting entries of a company, because for those viewers who don't understand it, adjusting entries is when a self-employed business person does entries at the end of the year. Usually, if they're doing them properly, there's nothing nefarious. It's cleaning up mistakes that took place during the year. Certain expenses may have been allocated to the wrong thing. You're adjusting it. Maybe there's a bonus that you're taking out, so you're doing an entry at the end of the year to reflect it. They're fairly, I'm not an accountant, so I may be off a little bit on it, but they're fairly mundane. But I remember one time I saw an adjusting entry where the company had 600,000 of income before the adjusting entry, and they reduced it to 100,000. That's going to lead to a lot of questions by somebody like you.
Yeah, that's a huge red flag right there. And Andrew, very often those adjusting journal entries at year end are often proposed by your external accountant. So it brings you back to the comment I made earlier, which is meet with that external accountant, review their working papers, and ask the difficult questions. Why is this adjustment taking my income down from 600,000 to 100,000 or whatever the number is? It doesn't make any sense, and there's obviously something here that doesn't smell right.
And a lot of adjusting entries are as I said, are very mundane. Like I think one of mine, it's depreciation on office equipment, depreciation on real estate. You're going to look at that and it probably takes you about half a second to go tick, that makes sense, tick, that makes sense, and move on to the ones where you see, lack of better words, some monkey business going on.
That's
and
right.
Sometimes you find, and I say this to clients, they can spend a lot of money on me, they can spend a lot of money on you, and you may find nothing.
That's right.
Or you may find something that's so de minimis that it isn't worth what the cost was. But the problem is, we can't, as professionals, say to anyone that we can guarantee what the result is going to look like. All we can do is ask the questions we need to ask and try to get to the bottom of it. And the other thing that you raised in there, in essence, is doctored documents, for lack of better words. And that's something I know law firms probably have a hard time finding. You may be better at finding it. I've had some encounters. I remember one of my associates, we found our own client produced a whole bunch of debt statements. And when he clicked on them in a certain way in PDF, he saw that these were PDFs that had been altered. And we could see all the alterations. We immediately fired our client. But it makes you wonder how often you get these documents, and are they real? Are they legitimate? How much time did someone spend to make sure that altered document is right? I usually say to my clients, look at the document if you're questioning it, because some people have a pretty good idea what documents are going to say, but it's when you're looking at either historical documents or current documents, things could be done wrong. Like, for example, sometimes someone will go to a court form and say it was created on a certain date, but that version of the form was created after that date.
A good example. That's a great example, Andrew. In fact, we recently had a case where an individual produced an Excel spreadsheet and represented it to be an extract of the bank statement. And when we questioned it and said we actually want a copy of the PDF, the bank statement, what we determined was they had altered some of the descriptions of the transactions, and there was an inconsistency between those two sources. And in fact, just extending to the next level is a lot of people have home computers. And during the course of the marriage, both husband and wife or spouses are using that computer for their day-to-day living and tracking of expenses and payment of bills. One of the things often, if a spouse suspects that their ex-spouse has been manipulating records, we suggest that they forensically image that home computer, even if they're not going to do analysis of the computer, just to secure that evidence. And so what we're talking about is mirror imaging that computer using an expert who is recognized by the court as an expert in computer forensics, not just an IT person. And that way it secures that evidence. and ensures if there is anything nefarious going on and they find it on that computer, it ensures that that evidence will be admissible should the matter proceed to trial.
It's a great idea, but it's one that you have to do the right way. And what do I mean by the right way is if you tell your client to do that and you get this expert to mirror it, you don't want your lawyer looking at it or your expert looking at it, because the concern I would have is it may have privileged communications between the other firm and the client. So the right way to do it is to tell the others, once you've mirrored it, tell the other side you've mirrored it, you haven't reviewed it, ask whether they have concerns for solicitor-client privilege. They may just blanketly say yes because they want to cause issues. And if they do that, then you may have to hire an outside lawyer to go through it who has nothing vested to try and raise where the red flags are and deal with what may be privileged and not privileged, because our viewers need to appreciate that if you do this and you're well underway and you don't want to switch lawyers, if I happen to mistakenly see a letter from the other lawyer to their client, myself and my firm are going to be bumped from the file. So, and so will the expert. So you really want to be careful before you look at anything to ensure there's no issues of privilege. But what you can do is you can get the documents, secure it, and don't look at it. I mean, I've had times where my clients have phoned me up, Andrew, you wouldn't believe it. I have a gold mine. I hacked into his computer and guessed his password. I'm like, no, I don't want to know anything. I don't want to see anything. Not appropriate. So you got to realize there's a real issue to our viewers about expectation of privacy. I think of before computers, there was typically the filing cabinet in the home where everything was kept and nobody locked them and both parties would put stuff in there. There is no expectation of privacy. But if I have my own computer and my spouse figured out how to get in, my privacy's been breached. Or if I have a separate part of that computer which is password secured, you can't go breaching their privacy. And you got to be very cognizant of that. And if you want to get that evidence, get it the right way.
Exactly.
This has really been an interesting show, and I see that we're out of time now. I only got through a few questions. So Edward, I wanted to thank you for joining us today. It was a pleasure having you, and I appreciate you sharing your experience and expertise. The next Ask Andrew show will be October 18th at 11:30 a.m. If you have any requests or ideas for future shows, please email them to us at info@feldsteinfamilylaw.com, and thank you for watching.